Bullish on the broader market for sure. What are the key areas that you're bullish on right now? And if you can tell maybe a couple of
it's a question of time frame. If you take a 3 to 5 year view, I think we are in the beginning of a mega bull market. If you take a 3 to 6 month view, I think you could get really hurt badly if things go wrong, because I think markets around the world seem to be priced for perfection and are not bothered about anything going wrong. So that's the risk. If you can deal with that risk, then I think you buy equities. If you can't deal with that risk, then stay on the sidelines and wait for that moment to come. But as I said earlier, when that moment comes, you don't feel like buying stocks, because stocks are really, when stock prices are attractive, you don't feel like buying them.
So Ridham, tell us, of course we are not discussing stocks here, but you got some really good stocks in February. I mean, some of these stocks have rallied 50-60%.
So as you can see, we start off by saying we're not discussing stocks, but then we discuss stocks.
This is not good news for me.
Of course, we'll not talk stocks, or maybe we will. But tell us, in the month of February, when you made that call, when you bought the market, you almost got the low in so many stocks. You said that you got lucky, but what do you do at a time like February when everything is falling like 9 cents?
I think so. Over the years, I think I have kind of, I should say, tried to learn to deal with my own fears. And I think I'm achieving some degree of success. Not a lot, some degree of success. I still get scared a lot of times. But yeah, I think maybe that was one of those moments when I got a little bit of success in dealing with fear.
Too modest.
Yeah, Sanjay deals with fear a lot better than I do. I know it. I have worked with him for 20 years. He's very good at dealing with fear.
Okay.
He's also very good at dealing with euphoria.
Okay.
I am a little less good at dealing with euphoria. I'm trying, but I'm a little less. He's very good at selling stocks.
Sanjay, how do you deal with both greed and fear?
And how do you deal with Ridham?
The last one is difficult. Fear, I've been married for 23 years. You learn to deal with fear, right, when you have been married for 23 years. Greed, whenever I feel extremely passionate and I think this is really the time to buy stocks, that's the time to go on a holiday and not do anything.
Okay, that's a good one. Ridham, you mentioned risk a couple of times, and I asked Sanjay this question as well. Everyone and his uncle is bullish in the market right now. It tends to get a bit crowded, this bullishness. What is the risk now to this market? Is it if Governor Rajan doesn't get an extension? Is it Brexit?
We'll only know after the market corrects what causes it to correct. In fact, we won't even know after that, by the way. Markets correct for their own reasons, which are almost unknown to mankind. They go up for their own reasons, which are also almost unknown. Can you figure out why the markets went up?
Today?
No. After the February 28th.
Maybe it's just because it became too overcrowded on the short side. That explained the first part of the rally, not being able to understand the second part of the rally.
Yeah, but you were not there in a position to say this on 1st March, when the market was turning, right?
Hindsight is always 20/20.
Yeah, so it's so hard to tell why the market will fall. I mean, I agree with you that there's a lot of bullishness out there. It feels that way. It feels like people are now piling in after a 1,400 point rally on the Nifty, and therefore, it's not a bad idea to put some cash on the side and wait for a correction. I think a good monsoon is in the price. I think Brexit is not in the price. I think the people are complacent about the Fed. I think people have gotten enthused about earnings, which is okay, but it's still spotty. Earnings, in my view, have bottomed. But I said that a year ago. And then they went down again. So, you can trust me only for that much. But I think earnings have bottomed and this season was good. But there are a few global macro issues. Our global view is not sanguine. And for Morgan Stanley's equity strategy team, Japan, Europe, US, emerging markets to be bearish synchronously is a warning signal for me.
Sure. And as we speak, actually, the Nifty has made a new 2016 high. In fact, it's trading at the highest point of the day, of the week, of the month, of the year. Of course, not lifetime high, but a new 2016 high. Do you get a sense that...
Do you remember last year when you were here, we had hit a new 2015 low?
Yes.
The market was thinking, and we didn't want to look at the screen.
This is the question that I wanted to ask you, because last year the market made a new high on the day we had the RBI rate cut. and you know, there was euphoria. And the market after that kept going down and kept going down, and through December, it kept making lower lows. This year, the market made the bottom on the budget day. You know, do you get a sense that this is exact reverse of last year, when the market will now keep making new highs, and you know, while there will be disbelief, but
Yeah,
you
see,
never know by
one
the end of the year.
disadvantage you have, you're a very smart guy, but you have one big disadvantage, which is that you have to look at the screen on a daily basis. In fact, on a minute-by-minute basis. It's a huge disadvantage you suffer.
No, but it's okay now.
The market has done nothing in the last 12 months.
Ridham, our jobs are now at risk because you started the show, you anchored our show, and the markets have moved up higher.
You're not letting me do
You have to
it.
look at the screens every day.
So it's over the 1 year, it's not gone anywhere, but it's given great opportunities to build portfolio.
Do what? If somebody bought the market a year ago, okay, he's not made any money.
On the Nifty. But individual stocks, a lot of money has been
But to
made.
be honest, Anu, the story of India has always been that, right? That we can keep on looking at the markets as a reference point to decide whether things are good or bad. But in reality, at every level in the market, it's always been about a set of stocks which do well and a set of stocks which don't do well. So I think that's really the way you will have to look at it.
Okay, I just
See, your point on, you know, a few stocks did well and a few didn't do well. I mean, did well and you could have made money. Is an exposed comment. Like, did you tell me in June? Okay, let's try this, right? Let's try and see what will happen in the next 12 months.
What will be the stock that will
Keep
make
it on
money.
record. We'll come back next June to test whether that has worked or not. Right? And it's not so straightforward. It can be said in hindsight. The fact is that equities have struggled, which therefore makes me more bullish.
Okay.
Right? On the long term, markets have not delivered. In fact, you know, I just did this exercise. 10 years trailing returns on the Sensex are 8%. Okay, that's equal to the 10-year bond yield. So if you had bought the 10-year bond yield 10 years ago, without risk, without volatility, you would have made the same money as Sensex. When I see look at the data point, it makes me very bullish on the markets. The last time such a thing happened was in 2001, 2002. If you had bought the Sensex then, you got a 10-bagger on the Sensex in the next 5 years. I'm not saying you're getting a 10-bagger again, but it just puts into context how trailing returns are. But if you look at the last 3 months, then you know, you use the 3-month trailing return to make a 3-month forecast, you use the 10-year trailing return to make a 10-year forecast, use the last 1-year return, which is nothing, to make a 1-year forecast. It looks okay. So using trailing returns to forecast is fraught with risk, but I think the markets look fine with
Just hold on, because the market is putting more weight. 80 to 24 is what we have on the index. So let me just take one quick thought from Sudarshan as well. Sudarshan, what did you make of this big intraday spike? Is this again a market which is breaking out?
Well, I hope so. I'm very pleased because since the morning I've been suggesting we should be buying and certainly go long above 8200, and whichever way we look at it, the markets are now willing to go towards 83, 8350, wherever.
Oh yes, 82.22 now, so it's going to be a very good day of trade, especially for the bulls. 150 points higher now for the Sensex, and so many stocks are spiking up, especially from the banks. The Bank Nifty, by the way, is inching towards almost a 1% high right now. Ridham, I read, you know, a couple of your recent interviews, and you have indicated that you have a bull case of 30,000 on the Sensex. That's something you mentioned to us as well. That's about a 12% upside from here. What do you think the leaders of this rally could be? I don't want stocks, I want sectors or themes.
You've decided that the market is going to buy bull case. My base case is 26,000, the market is already past that level.
If it goes to your bull case, then where do you think the leaders could come from?
I think consumer discretionary.
Okay.
We're very bullish. We're making 3 big calls. We're saying the GST bill is getting passed. I don't think it has major market implication, but it will boost sentiment to some extent. I think the corporate debt cycle has peaked.
You said that.
That doesn't mean you go and hunt the PSU stocks, because they may not have completely reported all the pain. But it's you know, incrementally good macro news, and I think consumer discretionary is going to give you superb returns over the next 12 to 18 months, because consumption demand has also turned, and I don't think it's fully priced in. I think the valuations are okay. So maybe consumer discretionary leads it, and followed by banks. Banks always will be in play because it's such a big sector, so you cannot ignore it. Markets can't make new highs without banks actually rallying. Okay. And in the banks, I think you want to buy private sector over public sector. We are actually saying that retail loans in India, which are currently about 13% of GDP, that number may double in the next 7-8 years.
Okay.
Corporate loans used to be 25% of GDP at the start of the previous decade. In the subsequent 10 years, it doubled to 50. That led to top-line growth of 25-30% for corporate banks. And corporate banks outperform retail banks in the previous cycle. People have forgotten that now because in this cycle, it's the opposite.
Yeah.
But now I think retail loans will do what corporate loans did in the previous decade. And that will be great news for retail banks. So we've just started this. People think that retail banks are expensive. They're not. They're cheap. They're cheaper than corporate banks. Don't go by headline price to book multiples because they will report growth and they will have cash flows that will essentially make the stocks attractive.
Okay, you never know what will happen to the earnings, of course, 5 years down the line. Right now, you're only looking at 1 year forward. Ridham and Sanjay, you know, we can go on and on, but unfortunately, I have to look at the screen as well.
Okay, go.
And yeah, you're saying something. Tell me.
No, go ahead. Look at the screen.
No. So we'll have to thank you on that note, and also tell you, thanks for being such a hospitable guest for us
But
and
you were
letting
still
our
a
team come
spoil sport
here.
because you didn't tell us your best and your worst investments. So you still have about a couple of minutes to do that. Your best and your worst stock investments.
See, I don't keep memories of my best and worst. They are very dangerous memories to have because they actually tend to fool you. You know, the easiest person to fool in the world is yourself. But there's a quote from Warren Buffett which I think will be of useful utility to all of us and your viewers. Warren Buffett said that rich people invest in time and poor people invest in money. And he said it in some context, but the context for me is that if you're still investing in money, then you're poor.
Okay, point taken. Thanks, Ridham. Thanks, Sanjay.
Thank
and
you.
thanks to all the Morgan Stanley team.
Thank you.
Thank you.
Thank you.
Well, that's the action from the Morgan Stanley conference, of course. But the market, 82.28 right now, and even the advanced decline ratio has now